Now, I am going to present about pre-planned clients acceptance. First, understand client business and industry. We'll make a better clarifications to the auditor of the daily business activities, and then auditor can easily find the misstatements, errors, and frauds. Second, assess client business risk. Identify risks relevant to financial reporting objectives, including risk of material misstatement due to fraud. Third, perform preliminary analytical procedures and overall review of the financial statements at the end of the audit to assess whether they are consistent with the auditor's understanding of the entity. Set materiality and assess acceptable audit risk and inherent risk. First, inherent risk is an inevitable part of doing business and occurs even when there are controls in place. An auditor's knowledge and judgment of the industry, corporate transactions, and company assets can help determine inherent risk. Companies with complicated business structures and transactions tend to have more inherent risk. Lowering inherent risk often involves re-evaluating existing internal controls and implementing new practices.
The next point is to understand internal control and assess control risk. The process of evaluating the effectiveness of an entity's internal control in preventing or detecting material misstatements in the financial statements. Next, gather information to assess fraud risk. The fraud risk assessment process should be both evidence-based and creative. Those completing the assessment need to be aware of known fraud methods, consider who might defraud their corporate processes or programs, and identify how they would do it. Lastly, develop overall audit plan and audit program. An action plan that documents what procedures an auditor will follow to validate that an organization is in conformance with compliance regulations. The goal of an audit program is to create a framework detailed enough for any outside auditor to understand. Thank you.